Good morning. I hope you're doing well, and welcome to today's edition of the London Session Open. Today is November 26, 2018, and my name is Alejandro Zambrano, Chief Market Strategist with Londinium FX. Let's begin by taking a look at my preferred trade setups and the markets that I found the most interesting and my positions. And then we're going to provide you guys with a general market overview. Right, so we'll begin with the Norwegian kroner versus the Swedish kroner. So this is the weekly chart, and as you know, last week the market really moved in my favor and in the favor of the Swedish kroner. So I shorted already on the 13th, which was 2 weeks ago, really. But yesterday we saw sort of a clear, decisive move of leaving behind the old range and we push lower. Now today, in this week, it wouldn't be unsurprising if we have some sort of correction, but I think that's just gonna be met by selling. In general, if you look here on the daily, weekly chart, I would say as long as trade below last week's high, which is 106.96, this market should be trading lower and not upwards. This is your daily chart, and we can swing up, and I think if we go up to 106.16, maybe 106.40, so up to this little area here, I think traders will sell. Now I saw this yesterday, and you might need to reach out to your brokers and check your accounts. My stop loss is up here, so I was not affected, but even with my broker yesterday, for about 15 seconds the price spiked upwards, and it happened happened as the market opened at 11:20 p.m. London time. I think what happened, if you look at dollar Norwegian kroner, like even with a fixed CM that has a good sort of a good liquidity, you can see here that for some reason at 11:20 the market's back down with about 0.14%, and then you have dollar Swedish kroner, which I think had very little, if any, movement at the same time. Yeah, here we go. So there was nothing here. So for some reason, there was some sort of I think it was just a bad pricing. And I know already last week there was something similar in the Norwegian kroner versus the Swedish kroner. And at least one of you guys got stopped out because of that sort of bad price. And in essence, that member reached out to their broker and they reopened the position. So that's what I would have done here. The only issue today, though, is that this price is visible in forex.com, so gains pricing. And then you have, even on this one, ICE, which is not a broker, but they have the spike as well. Personally think though, and the way this looks like, I think it's just a sort of a false price move. Again, if it goes upwards to these sell levels, I would guess that people will try to sell. And when and if we take out 106.65, eventually I think we will be able to reduce the stop loss to this week's high, last week's high, without any major issues, and hopefully avoid any spikes, and then eventually down to 106.44. And then lower and lower and lower. Now, what else sort of, is anything brewing, anything really interesting happening? Well, as you know, the Norwegian kroner versus Swedish kroner position is a rectangle, right? It's just support, resistance, and you look for the breakout. It's the same thing here. This is the Chinese stock market, and as you know, we're stuck in a range. It's quite wide. It's about 11%. But 11% is not that much in Actually, let's work this out better. 11% is not that much for a stock market. So I'm looking for either a bullish or a bearish move. And we traded this before. I mean, we've seen it before. Is that I didn't necessarily trade it, but this is another one. You might remember Taiwan. You got the Taiwan stock market index, which, you know, had that break here and then went lower. We have, we have copper. Actually, copper wasn't really, yes, actually, copper was, I think, a rectangle. This is copper on the daily. It's some sort of a rectangle at the end of the day. You want to remember this? We have that big decline here. Well, the big difference was 11.5%. And we actually reached target. I didn't hold on to the position all the way to the low. If I did, it would have been really, really good. But you can see here how this pattern is a nice predictable pattern most of the time. Even if it's not predictable in a way that sometimes, most of the time, it does not even go all the way down. When it does go down, it gives you those crazy risk-reward ratios. Here, for example, if we would have, even if we would have shorted 1 day late, I think we did short 1 day late here at 289. Then say you short here on the close, you put your stop loss just above. So that's 531 points of risk. Then we just take this, which is 3537 over 531. That's 6.66 times risk reward ratio. Put 1% on, you lose 1%. But if it goes good, you make 6.6%. I mean, you can do this 6.66 times as long as you get it right the last time on the 7th time. So 7 times, you would be at break even. Does that make sense? That's why I trade these moves. And that's why something like this, which is very unfamiliar to most, that wouldn't bother me. It's still a market like any other one. And then we have the Aussie stock market, which is above major support at 55.95. This is not necessarily a hidden rectangle. There was a rectangle here between this level and this level. Here was a bit of a rectangle. Here it did not go all the way up, but it did move upwards. And as you might remember, I was able to reduce my stop loss here. So I think we even got away with a little bit of money or a break-even trade here. So here, what's interesting is to pick out support. We can go much lower. Here's the GBP versus the USD, which is in a ascending triangle pattern. And we have negotiations. The vote, as far as I understand it, should happen on the 2nd week of December. And we're now in the final week of November, so we still have another 3 weeks left. Yesterday it was interviews about the DUP, and I think the S&P has as well said they're not going to vote. So I put a little chart on this 2 weeks ago or something like that from the BBC on my Twitter. And it's very clear that's going to be very difficult, if not impossible, for Theresa May to get this deal through. And that's going to be interesting. There's a lot of talk about a new referendum or letting people vote on sort of, should we go for hard Brexit like what Boris Johnson wants and Rees Moggs, or should we sort of not have a Brexit at all? So, but there's not. It's very weird because Theresa May in one way says, maybe we will not have a Brexit. But then when you ask her, do we want to have a referendum? And then she's like, no, we're not going to have a referendum. So there's sending mixed signals here. The way things looking right now, that deal is not going to go through. And then Theresa May is going to lose her position. And they're going to scramble to get a new leader. And I personally think there's not going to be enough time, and the UK is going to crash out. I think that's really what Brexiteers as well are looking for, and that would be very, very bad for the UK economy. So that's sort of the scenarios I think. No, it doesn't go through. she gets ousted, and then there's not enough time, and then we take out support. And according to this pattern, independently of what happens, if we trade below 126.63, this market should go trading lower. The alternative is we take out this high, and it is actually allowed to view this as a rectangle as well. Sorry. And if we take out this level, the market can go upwards. In GBP CAD, we have something similar, but it's a rectangle. You just take out support, market is bearish, take out resistance, the market is bullish, have a nice rectangle. So the way things are looking right now, and as well given the significance of Brexit, it looks like we're going to have some very good opportunities in the GBP. Here's another one, which is the British kroner versus the Swedish versus the GBP. Again, this is a very nice narrow range. Take out support, and this market could trade much lower, like that. And you can see this market do something like this. And take out resistance, and we might have that breakout. You might remember I did try to trade this one. Did not go that well. Now the biggest challenge here, I wouldn't really necessarily get involved here in this small market without seeing the GBP USD or maybe GBP CAD breaking, because what's going to happen here is that these two markets, the Swedish kroner is such a tiny market that just because it breaks below here, it could do so because the Swedish kroner are gaining. So it is possible to trade it. But the Swedish kroner, no, it's not the most reliable market to trade. Here's another market, rectangle, and excellent if you happen to be a bearish trader. OMX30 trading lower. I mean, the US stock markets are very close to trading much significantly lower. So this might be something where you can get away with a very nice risk-reward ratio entry. We already talked about this market when we were trading up here, how if we take out this level would be interesting. The market closed very close to these highs, and it is possible to short this. It will probably open a bit higher, so it might even open above these levels. And it will be interesting because it will be possible to take a small position on of 28, I'll say 29 points. And if we reach sort of the target level, we could potentially make 193. So 193 over, I think I said, right, let's just do 30. That's 6.643 times your risk-reward ratio. So that's another excellent opportunity, especially if you happen to be a bearish trader. Now here's the Russell 2000. This is not the cleanest or clearest pattern to trade, but it is a head and shoulders with a head, left, and potentially right shoulder, where the difference between the head and the neckline is about 16%. Depends on how you count. For some reason, last week I got it 20. No, yeah, it is correct. Forget about the percent this time. When these sort of markets, there's no need to. Sometimes what I do, especially with cryptos, is that I will look at the percentage change. So the percentage change between high and low is 16%. So that's correct. But this is what's interesting. The break here can open up for a decline of 289 points, and that is 19%, almost 20. And that's correct. But with crypto, sometimes it doesn't make sense because, you know, if it would decline, it would decline with a crazy amount that would literally take the coin below zero, which is not possible. It would just break down into further decimals, and that's why I do percentage with cryptos. But here it suggests we can decline even further. Now here I'm a bit skeptical to this, because if we were to decline to these levels, then we're heading into a recession. Recession will come, but I don't think it's gonna come just yet. I mean, if this swings up to the midpoint of this range, to 1593, so spends another few weeks here, if not months, then that would not surprise me at all. Here's another one, a rectangle betting on a stronger dollar Hungarian forint. Take out 287. This market goes upwards. That's good. And actually, still like that. And here's another one. If stock markets indeed go higher, this market, which is the GBP versus the USD, GBP versus Japanese yen could rally. You have left and a double right shoulder with a break here, potentially giving you a significant rally. So you have several stories in the charts. You have the story of recovery of the stock markets, which would be this, and also victory for SMA would be the breakout. And then you have all the GBP pairs as well. On the other hand, you have weakness in stock markets and the OMX 30. Now, the best thing to do now is just to wait for a break out of these patterns. I know they're big patterns, and I know we haven't triggered a new pattern since I think 2 weeks ago when the Norwegian krona traded lower. Sorry, we have the OMX 30 that just triggered a breakout last week. So there are these patterns, but things are not moving as fast as I would like it to be. But there's nothing I can do about that. In Sweden, we say there's an expression: you can't squeeze blood out of a rock. I'm not sure who invented that, but it is true. You can't squeeze something out of a market that doesn't want to give you nothing. So for now, those are the patterns I like. Those are the ones I would focus on. There are other stuff as well, which we're going to do now, because it's going to provide you guys with a general market overview. But the quality of all of these things we're going to look at now is not as high as the quality of the other setups I just shared with you. And we'll begin with the euro versus the USD. So this is the euro dollar, and the euro dollar, stopped creating higher and higher lows. Did so on Friday. I think now we can probably reduce the trend of funding level a tiny bit, and I suspect that going forward now, the traders will try to sell between this level here, which is 113.79, and this high. Take out this high, and we probably would have triggered what looks to me a head and shoulders. This could technically be the left shoulder. This could be the right shoulder, and this would be the trend defining level. You may ask, what could trigger that? What could trigger that are comments from the Federal Reserve that they're not going to raise interest rates. And then if they, in fact, do not increase interest rates, then you're probably going to see that push. On the other hand, if they do go ahead and increase interest rates, then you already know what we can work with. You can work with the dollar Hungarian forint. That makes perfect sense. And technically, you might potentially be able to work with something like stock markets as well, because higher interest rates should spook stock markets. This is probably going to be other setups as well. Maybe something like I would call something like, for example, dollar Singapore dollar can be interesting. Might be that GBP USD is going to be triggered on the back of that Fed raising interest rates. There's GBP USD. So there's no change here compared to what I said before. In the short term, is a random outcome here. We can be up, we can be down. Most likely upwards, most likely more sideways. The market is very calm now ahead of the vote coming up. Dollar versus the Japanese yen. Japanese yen, very special, tends to sort of, actually even with the euro, tends to make up its minds, tends to be something interesting. And the dollar yen is one of those markets where you will see activity in by the end of the year, beginning of the new year. Let me just check something here. Very good. So that's something to keep an eye on. For now, though, this is just trading sideways, bullish, bearish. Um, this is the New Zealand dollar versus the USD. It is moving upwards. The trend is bullish above 67.01, and the idea was for this to bottom out. Here it's looking alright for now. And you can see in general how the market sort of trades in a different pattern. It's really fighting back. So you can see that this is the characteristics of a correction like this one. It's not the characteristics of a downtrend, which would look like that. It will sometimes, as you can see here, develop from a correction to a downtrend, but in general, we've been in an uptrend, so there's no real reason to sort of change our minds now. I mean, it's not about us changing the minds, there's no reason for the market to change its minds. Here is the Aussie dollar versus the USD, and the idea was to buy down here. So far, it's looking all right. It's even trying to take out this level. If it takes out 72.76, probably head upwards. Dollar CAD, this always looks like this. When it's time to buy, it looks quite rubbish, but it is at the lows, could easily go upwards to the high, 133.16 and 133.73. Here is the dollar versus the Swiss franc. The market is bearish, and I don't have a strong view, but if it goes upwards, I think it can go lower like that. Here is the price of crude oil, where we did talk, we didn't get involved in this latest move. But you might remember, I said down here, there's two options. Book the whole lot, the whole profit, because we said look to sell here, or keep half. If you kept half, congratulations. Of course, if you've been keeping half since up here, then congratulations. If you lost money here throughout this period, then you haven't been paying attention to my outlook. My system is, the short-term one, is simple, it's stupid, because it's a trend following system, but it's powerful. It's stupid because it only looks back what happened over the last 3 days, and from that point, it sort of tries to make up its mind if we should long or short. And it's stupid because, it's not a fancy system, is it? No, it's not. But it will keep you out of trouble. And if you're really stupid, you'll actually follow and do exactly what it tells you to do. And this is the thing. I was bullish from here all the way up. And then the system told us, take a step back. Don't buy. Don't buy. Don't buy. And I think from except one little episode here where I said bullish or bearish, I think it was here. And that bearish, bullish scenario never kicked in. The system has been bearish. So A, if you didn't trade it like I did, you would have stayed out of trouble. Number two, if you did trade the few setups we talked about here about selling, you still would have made money. And that's my system. And the problem though is that it's such a difficult system to deal with, sometimes the short-term one, especially in these situations here. Because in these situations here, because the market was trading sideways, I pay less attention to the system. And here, while the short-term system would have detected it, the bigger picture system I used did not detect this, because this was not sort of a very good pattern. It didn't look like this if you look at the individual contracts. Another thing as well that is really striking is that if you're using a short-term trend following system, then you will usually make money in these sort of conditions. That's when you sort of generate most amount of return. Now what is interesting with that is that if you use a daily chart, you can take advantage of these moves anyway. So with the daily, except in this case you cannot take advantage of it, but most of the time, when you do have a sort of a breakout on the daily, then the breakout on the daily is going to give money to the daily trader, and at that time as well, the short-term scalpers are going to be at their best. So I'm thinking, why get involved with the short-term sort of trading when I can just trade the daily chart, and I won't get everything that the shorter traders are getting, but I will get some of that, if not at least half of what they're getting, with the less stress. Because every time the market trades sideways and you start to get involved with the short term more often than not, what looks like a decent little trend on the short term could easily turn into something choppy. So yeah. So what's the plan going forward? I wanna see what's gonna happen with the Bloomberg and all these guys, CNBC. When we're trading up here, they were all like, "Oh, when are we gonna reach 100?" Now we're down here. It's more about panic, and what happened here as well is that a lot of hedge funds were long here, like everybody was long. Now I think we're seeing a big unwinding of that, and that's why we're seeing this. People are booking losses. Technically here, there's no change really to the outlook. This is a 4-hour chart. I'm gonna get rid of this now, and the trend defining level remains the same. And if you look at a 1-hour chart, you can just take fib from this high to this low like that, and you get these levels in sort of 50% correction. So up to about 52.77 ish, which is slightly less, will be met by sellers like that. So another day in a bearish downtrend. Okay, let's speed up things here. I just noticed I've been focusing too much on the details. Okay, this is gold. Gold, you know, either it's being bought, it could be bought down here, or it could be bought on the breakout. I don't have high hopes for this one, but it's definitely moving upwards. There's no change to this outlook compared to what I said last week. Here is the S&P 500. S&P 500 is interesting. It did not really manage to trade much lower. I think if it does trade below this level here, you can potentially have further weakness. If you did sell, then stops should be here. But otherwise, the break here this time around, with everybody back from holiday, could potentially cause this market to go down. Alternatively, we correct upwards, and it could potentially be sold here, which is also where the trend line sort of meets up, and this will be the trend of funding level. What's interesting with this one is that this is it's a more important level than the other one. Nasdaq 100, we did quite good here. The market took out support, traded down to the first support level. If it goes to 66.80, I think traders are going to sell here. I think stop loss orders are still going to go on the other side. This is the Russell 2000. It managed to bottom out. Not out of the woods yet. Here, as you know, we're working with that head and shoulders, as I mentioned. This is a trend defining level. Take out 1532, then this imminent bearish bias will be over. And here, I'm not that keen of short selling just yet, but it could potentially be possible to short sell up here. I'm not a big fan of this market though, to sell it right like that. I think prefer the breakout here. Here's the Dow, and the Dow, I haven't done any analysis on this for quite some time. I think at the end of the day, the US is going to be good, but if Donald Trump goes ahead and increases tariffs on the Chinese imported goods by January-ish, then yeah, we're probably going to trade lower. I personally think that somewhere down here, this market is going to try to bottom out, if it didn't bottom out already. But somewhere down here, actually, I think it would be interesting to look for a buy opportunity, because this is a nice normal rectangle, and it's just going to take out support here if the market just sort of if the Fed is not the Fed, if Donald Trump increases tariffs again. Here's the German DAX. and it's doing quite well today. It's back up at the sell zone, and this is my preferred market to sell if you do want to short because it's already bearish. OMX30 is another one as well. Here we talked about selling here a few days ago. The market moved down but did not go all the way down to the profit target. It's now moving upwards. If it does take out 11,433, then this turns bullish most likely, but I will probably hold off for the position, I think, until we take out this level here, which is 11,568. But take out this level, definitely abandon bearish view. So here I think traders are going to try to sell here for this to go down. Alternatively, one does not work with that setup, just work with that setup here. And then you have the dollar index, which remains in a funny, not a funny looking uptrend, but it's still a bullish channel if anything. So you're seeing some dollar strength in some markets, but it's not really that concise. In fact, when I look at this one right now, let's clear all of this away. Yeah, I wouldn't really. Yeah, actually, I think it could be called a tiny head and shoulders pattern here. I probably would not trade it because it's quite tiny, but it's something to keep your eyes on. You got your left, you got your right, and you got your head. Left and right shoulder, that is, and potentially triggering it there, but most definitely being bearish here with support on here. This is messy, so we're better off looking at something like the other markets to sort of make a decision. Okay, I think we're gonna wrap things up. Guys, if you have any questions during the day, just send me a message. It's a little bit quiet here in the morning. I understand that. I think most of you guys, well, I know that most of you guys look at the video nowadays after it's being uploaded. So if you do have any questions, then just let me know and I will reply back to you. Thank you.